So the Fed is out, and we now know that the Fed is going to be dovish for not just a couple of weeks or a couple of months. That the Fed, in fact, when the Fed goes dovish, just so you know, it usually tends to stay dovish for quite a while. And so yesterday, March the 20th, I think it was, 2019, we got confirmation of that. Now, a couple things have changed, or a couple things have confirmed since that, or because of that. And I'm going to show you guys a couple of important charts. Now, before we do that, though, I want to re-invite you to the Wealth 365 Summit. This is the largest online trading and investing conference for traders and investors. I would highly encourage you to join us, to join there. I'll be speaking there, and I'm going to reveal something that I've never taught anyone before, and is a very specific charting pattern that sets up for the highest probability trades from an income perspective. And I made a video the other day where I kind of highlight that a little bit, but I'm going to go in great detail on what that chart pattern is. And again, I've never taught that before, so you have to sign up. It's a free event, Wealth 365. Sign up down below or in the email if you got this by email. So let's look at two charts. One of them is bonds, the other one is financials. Two very, very important charts to understand what's going on, or what happened, or how the market reacted, I should say, to the Fed and what that's telling us. So first of all, I'm going to quickly flip the camera. First of all, let's understand what happened to bond prices. So what we're looking at here is we are looking at a chart of long-term bonds. This is an ETF called the TLT ETF. And essentially, if we zoom out a little bit on this, what you can see, what happened here is that the bonds, a couple of weeks ago, when they sold off a little bit, they retraced back to what used to be resistance. Can you guys see that? See how we retraced back down here, and now we found support, and now we're breaking out. So if you go into the daily chart, you can see this even better. You can see that bond prices are now attempting to potentially break to the upside. If I were to make a very simple sort of horizontal resistance line here, kind of like this, you could imagine that they're going to break higher. That's been one of the core views that we've had now since July of last year, is that bond yields are going to continue to be under pressure. It was one of the more controversial calls I made last year, and we actually had a lot of people push back on it, but it's definitely been the right call. And I continue to think that bond yields will remain under pressure, i.e. bond prices will go higher. The stock market, I think, largely will remain fairly range bound. That doesn't mean we can't have breakouts. So let me show you guys what's happening in banking stocks as a result of yesterday's dovishness by the Fed. So we can look at something like the BKX, which represents banking stocks as a group. And you can see a very strong and clear bearish reversal. That's right here. That's yesterday, right at the 200-day moving average. That's your red line here. And I do think it's going to be very difficult to see banking stocks really push meaningfully higher from here. So that's that. Now, again, very important, guys. Sign up for the Wealth 365 Trading and Investing Summit. This is the largest one in the world. It is an awesome event. You're going to learn so much stuff. I'll be presenting, and again, I'm going to be presenting something I've never done before. I'm going to show you a very specific charting pattern that is the best, highest probability charting pattern for generating income from the stock market. These are trade ideas that we send out to our clients all the time, and it's all based on one very specific scenario and one specific chart pattern in addition to that we take advantage of. So make sure you sign up for that, and I'll talk to you guys soon.